Hey folks, welcome back to the channel. This is Jason. How is everyone doing today? Not sure how many of you guys are on this at this time of day, but I did want to talk today a little bit about what's been going on for the month of April in terms of the stock market. And I want to say that the stock market has been remarkably calm in April, but it hasn't just been remarkably calm. In the market has been volatile now years, well out of historical norms. And the calm that we've seen in April is actually kind of a historical calm. And it's really something to behold. And I think that it really is the calm before the storm here. And this article here that I put the link to in the description of this video has some of the numbers behind that. But look, we've seen a market rally this year. When you put things in a longer term perspective, though, the market really isn't moving at all. So it's about 1% up over the last 2 years, meaning since this time in 2021, the market is up about 1%. And in that time period, there's been incredible movement up and down until this month. And we've seen a screeching halt in terms of volatility. Is this the calm before the storm, or is this the calm that just keeps continuing? I say that it is the calm before the storm, and I think the storm is likely coming due to political reasons. And let's talk about that. But one of the things that's definitely going to influence the calm this week is all of the company earnings that are coming out. And there are a lot of company earnings that are coming out. So this may be one of the most important earnings weeks in recent memory. So if we look at most anticipated earnings this week, April 24th through the 28th, what we're looking at is Coca-Cola today, which actually reported a sequential increase in volume. I didn't take a deeper look at the numbers, but they're predicting this year about 7 or 8% organic increase in business, taking into account everything that's going on with inflation. We're looking at 3M, Google, Pepsi, Halliburton, Enphase, Microsoft, UBS, Visa, GE, and GM, Bank of America, Meta, Teladoc. Let's see, Philip Morris, Amazon, Southwestern Airlines, Caterpillar, Pinterest, Snap, Eli Lilly, and MasterCard, CVX, and ExxonMobil, all reporting earnings this week. That's a really wide swath of the economy, guys, and it's going to give us a good idea of which direction we're headed in. And this is kind of a representation of that. This is the quarter that I expect to see a little bit of softening in terms of earnings, mostly due to the increasing challenges of inflation. And going forward, I think that this may not be an indication of a recession, but I think it's going to bring volatility back into the market. And that is going to be further compounded by the absolute clown car that is budget discussions going on right now at the federal level. I apologize for all the advertisements popping up here. Apparently, since I'm getting close to 50 years old now, we're seeing all these AARP advertisements pop up. It's only a matter of time before you also see the Viagra advertisements pop up on here because I'm approaching the age of 50. Okay, so like I said, this week, earnings heavy, but because it represents such a wide swath of the economy here across many different industries, and I think is a really good representative example of which direction the economy is going in. I think that this is one of the most influential weeks in terms of earnings that we're going to face. The second challenge that the economy is going to face is going to be that budget discussion. And like I said, it's an absolute clown car right now. The negotiations that have been going on and that haven't really been negotiations, McCarthy finally introduced a bill. I'm skipping past all of the obviously politically motivated rhetoric that goes into this article because it really just kind of cast McCarthy in the most negative light. So I'm actually kind of going over that. And we're going to discuss what the bill actually entails. McCarthy finally introduced his debt ceiling, which would raise the limit by 1.5 trillion until March 31st of 2024. That is not even for 1 year. In return, McCarthy and his supporters want to cut non-defense spending to fiscal year 2022 levels across the board, thereby allowing Republicans to claim ignorance of specific reductions. So we do need to talk about the budget. We need to have a serious discussion about the budget because it's really going to affect our ability to pay our creditors. In what I mean is to pay off our bond debt. And there's a reason for urgency here. I'm going to discuss that in just a second. But the second layer of this strategy, which is allowing Republicans to claim ignorance of specific reductions, I think is actually a very good strategy on their part. Any budget discussion that requires cutting any sort of government program is going to cause somebody to lose their job. That is just a fact of the matter. When I mean somebody in Congress. And the ability to claim ignorance of specific reductions, say this is a cut across the board, I actually think is the wisest way to do this. But the few details that they do have are headache inducing, according to this article. A rollback of increased IRS funding, which raises the deficit. We've had really weak collections this year in terms of taxes, and that is going to affect our ability to pay our bond debt as soon as the middle of June. They also want to cancel the student loan forgiveness program and then impose work requirements for Medicaid and other programs, which is neither effective nor necessary. Prime age employment is at its highest level in more than 20 years. And this is actually a really good example of that. Prime age employment is considered people who are done with education in their highest earning working years, 25 to 54. And they are indeed correct that that is the highest level in the last 20 years, 17 years or so, that we have more people employed in that prime working age group than we've had in the last 20 years. And the only time it has been higher has basically been 95 through 2001 time period. It's been below that ever since. So it's not effective. It's just something that plays well at the voting booth. And anyway, I'm going to go ahead and click off of that because it's taken up a lot of here. So taking a look further ahead at the predicted monthly probability of a recession in the United States, and this is something that's done by Statista. Right now, we've seen this get pushed further and further out. It looks like economists are predicting on an aggregate basis that January of 2024 is where the risk of recession actually peaks. And that is something that that I think is probably more likely at this point. And 57 to 50% probability of recession, it generally means that the likelihood is quite a bit higher than that. So that's what we're talking about. Okay, so I did actually an article on Coca-Cola's earnings. Now, I realize this is not something that I normally cover on this channel. What I talk about a lot is technology stocks, and I'm going to get to Tesla and talking about some of the discussions here. But these companies like Coca-Cola and some of the other earnings that are coming out this week are things that I mentioned that are bellwethers of the economy, and Coca-Cola is definitely that. So Coca-Cola posted first quarter adjusted earnings of 68 cents per share on sales of 11 billion. That's up 5% year over year. Analysts surveyed by FactSet were expecting earnings of about 65 cents per share and on revenue of 10.8 billion. So earnings are up. Revenue is actually down below or right around what they expected, a little bit more. This time last year, the owner of Diet Coke and Minute Maid reported earnings of 64 cents a share on sales of 10.49 billion. So Coca-Cola Company today reported first quarter 2023 results demonstrating resilience in the marketplace despite an operating economy that remains dynamic. I like how they phrase that, remains dynamic. So they reiterated their outlook for the full year, expects comparable earnings to grow between 4 and 5% and organic revenue growth between 7 and 8%. And that is a reflection of the pressure that inflation is putting on earnings. Expect something like this results for a lot of these companies to go forward. Okay. One of the things that's happening in the financial space right now, interest rates for savings are probably peaking, at least for the moment. And what we're going to see now start is a war for deposits, meaning that the banks are going to start doing something that they haven't done now for more than a decade, and that is raise interest rates and offer CD rates that are really attractive in order to battle for your deposits as the spigot of really cheap money dried up in the economy in terms of the Federal Reserve. And that is going to play havoc in the short term with their their profitability. They're not going to be unprofitable. It's just that they're going to compact their margins rather temporarily. And as the Federal Reserve starts to freeze interest rates or even starts to reduce interest rates, we're actually going to see an expansion of those margins, and it'll be very, very good time for financials. Probably going to take the opportunity to make some investments in really large financial institutions in the future, looking at the Goldman Sachs, the Morgan Stanleys, and that sort of thing. I already own enough of very risky fintechs like SoFi, which I don't think is as risky as the market thinks it is, but I already own enough of that to satisfy my appetite. Okay, so on to a few questions here. I just wanted to talk about this. And one of the things that I forgot to mention is that not the Federal Reserve, but the Treasury Department has already come out and stated that based on weak collections and part of that is because California, no one has to report taxes in California and pay a penalty until October 15th of this year because of the natural disasters we had because of flooding. California accounts for a massive percentage of government revenue, and all of those returns are late. But that is actually going to push up the deadline for figuring out a solution to the debt ceiling and budget crisis that we are going to go through. It's not obvious yet, but that timeline has been contracted. And between now and June 14th, 15th, you're going to see a lot of action in terms of what Congress is going to say about budget and the economy. Let's remember that none of this is actually real, what they're talking about. All of this is designed to just get their faces on the air, and not much of it is actually going to have an effect on your portfolio in the long term. It's going to be a great opportunity to pick up some really good companies at bargain prices, and I expect that panic to start hitting sometime in the next 2 weeks as the rhetoric starts getting ramped up. They put the politicians and talking heads on camera to talk about the necessary budget cuts that we need to make. And no one's really going to want to listen to reason on that. They're going to take it down to the wire, folks, because they want to squeeze as much face time on media as they can, on the internet, and of course, on television as they can out of this crisis. They are not going to let this crisis go to waste. Okay. So, what do I think of Elon's strategy of going after volume over profits? Do robo-taxis make the stock skyrocket? So let me answer the second part of the question first. I think that robo-taxis actually would make the stock skyrocket. I think that robo-taxis have a long way to go before they're able to be introduced. I think Waymo in a lot of ways is probably a little bit ahead of them, but they're limited to a really small geographic area. I think that robo-taxis are kind of the future of this. In a way, though, robo-taxis have a way of really threatening Elon's strategy of producing 20 million vehicles a year, because he's not going to have a lock on that technology. There are many other companies that are developing this technology. It also reduces the need overall for car ownership. If you're taking the labor aspect out of the car, meaning there's nobody needs to drive the car in order for you to operate this rideshare, it actually kind of takes away from the need for people to own cars in general. Like, I've actually calculated that it's way cheaper for me to use, Lyft or Uber to go anywhere I want to than it is to actually buy a new car. Not that I buy new cars, because I don't. The last car I bought was in 2020, and I bought it for $5,000. It's a hybrid. I'll drive that till it dies. Maybe I'll buy a new car. Maybe by then I won't need to buy a new car. But if it's already cheaper for me to take Uber or Lyft everywhere I need to, rather than buy, say, a $35,000 car, it definitely is, then I think that's going to be the case for a lot of people. And once we have robo-taxis, it's actually going to reduce the need for people to own cars altogether. Think of every major city looking like New York in the future, where public transportation is so good in New York that the vast majority of people will never need to own a vehicle. And lots of people there don't even have driver's licenses. This is a future that I can see for most major cities, where people figure out that it's a lot cheaper just to take robo-taxis everywhere. And if you want a car to go on vacation, why don't you just rent one? I think that is kind of the future of car ownership here, that the idea of owning a car, how we own a car, the idea of what that says about you and our society, that is completely changing over the next year. So, what are you going to book? Are you what Uber are you going to book to tow your boat? That may be actually possible in the future. But if you think about it, I don't take my boat out that often, and when I do, it's even if you look at how much it costs to own a new car, right? Say $500 a month in payment, maybe $600 a month in payment, plus the insurance to go along with that. Say because I got kids in the household who are about driving age, it's almost going to be $700 a month or so just to own that vehicle, plus all the gas that I'm going to put in there. Say $1,000 a month in order to own your vehicle. I know you can do it for less. You can definitely do it for less. But if I take my boat down to the boat launch once a week or so, and I'm not making that once a week, it's more like twice a month, I can probably rent a truck for the times that I need to do that and Uber everywhere else, and it's still less than that $1,000 a month nut. So okay. Hey, Jason, morning. My time from Australia. Why do we talk about staying away from markets in May? I look back historically, it seems to me a mixed bag in regards to how markets fare in May. Well, it used to be that serious traders kind of went away from the market between May and October. That the old adage was May and September rather, sell in May and go away, meaning that all of the institutional traders were pretty much on vacation or at home with their families. But that to a degree is no longer true. Trading has always gone on year round, but the idea that these major stockbrokers take vacation all summer like they used to when the market was extremely limited basically it used to be that you couldn't just go in anywhere and buy anything less than 100 shares of any stock, and stock traders used to get paid like 50 cents to $1 per share that was traded. And you used to make big bank trading stocks. All of that has gone away with nearly free trading. I mean, facilitating trading alone is what most financial advisors did back in the day, and all of that has gone away. So, okay. So, what do I think about Elon's strategy of going after volume over profits? First of all, I do think that this is an incredibly good idea, but it's also an idea that pretty much only Tesla has room to do. I did a very short 9-minute video on Tesla and sort of the media bias that goes into reporting on Tesla. And one of the big things I did about that is how the media is making a big deal over price cuts with Tesla, saying that's going to impact their profitability and all this. And I pointed out in that article, using a study done by another company, that Tesla's per vehicle margin on average is about $9,500. All right. And the point was, and I made the point that it's mostly due to the changes in manufacturing they've done. Somebody else in the comments made the comment that's about the dealership model. The dealership model costs the manufacturer a lot less than you think. It's really that's really their advertising budget. That's what it costs them. Dealerships are individually owned, and they have a servicing model that goes along with that. And that's how dealerships make most of their money. If you look at a company like GM, they're making about $2,200 per vehicle. At least that's what I think I remember on there. Plus, I know that dealerships make an average of about $2,200 per vehicle as well. If you add those both up together, it's still less than a half of the profit margin per vehicle on average that Tesla has. They have a lot more room in terms of profitability to cut their prices and charge ahead with increasing volume and selling. And the goal of Elon's company has never been to be the most, I'm sure it is to be profitable, but it's never been to be the most profitable. It's actually to put EVs in the hands of everybody that can afford to drive. And it's about electrifying the economy. And this is the way to do that. And this is the way that every company in the auto industry has actually been successful. It's been to, at one point in their life cycle, is to prioritize volume over profits. Every company that has made it has done that at some point. Tesla did it earlier in their career before they were profitable. Now that they're profitable, they're doing it again. Do I think they're going to sacrifice short-term profitability over the next 3 quarters in order to go for volume? I absolutely think they do, especially when it comes to output for the Cybertruck. which apparently is happening at the end of third quarter this year. We're finally going to see Cybertruck actually come out and to see deliveries made. So Hal in Australia, unfortunately, it may not be true that you see the Cybertruck anytime soon. From what I understand, the Cybertruck is still not approved for delivery in Australia. It has something to do with that. So we see Michael Will, Apple are opening a factory in India. Their market share of iPhones is around 6% in 2022. The middle class in India is bigger than the US population. Is Apple on your list if share price drops? So Apple is a company that I've consistently missed the boat on. I would say that Apple is probably on my list at this point. And I've had this discussion before about the perception of Apple and how I don't understand the brand power that they have. And this is my big weakness. Like I look at technical specifications, the usefulness that something has in my life, and that's what I think is good. And I don't understand, and this is probably related to related to somehow the way my brain works, but I don't understand the power of brand when it comes to Apple. And the religious devotion that people have to their products here in the United States. That's certainly not the case worldwide. Apple has about 14% market share. They do kind of have a lock on the wealthiest people worldwide, but there's nothing less capable about the latest Android phones that come out in comparison to Apple. And there are many arguments to make that the latest Android phones that come out are actually superior to that. And it's an open source platform as well. It's easier to develop for Android. You are able to, there are fewer limitations for developing on Android and a lot of those things. But oddly enough, the Apple has really large share here in the US and far less overseas. And you're correct to say that Apple has a market share of about 6%. I looked that up like pretty much the other day. That actually surprised me. So the middle class in India is bigger than that of the US population. I would need to see what the definition of middle class is for India and if an iPhone is actually within their price range. Because the iPhone is barely within the price range of the middle class here in the United States. A lot of people that own an iPhone probably really can't afford it. Yeah, so that's kind of how I feel on that. But is Apple a decent investment? That is a question that that's kind of hard for me to answer. I was on I was of the opinion that once Steve Jobs died, that the cult of Apple would die with him. Because really it was Steve Jobs' role as the greatest salesman on the planet and visionary on the planet, rather than actually having the best product out there that made Apple successful and the greatest showman. Tim Cook has proved to be a very, very capable successor to Steve Jobs while not being the same showman that Steve Jobs was. And I do think that Apple definitely has a future, far more of a bright future than, say, the generalized organic growth of the S&P 500. I do think it will likely outperform the S&P 500, but is it going to have returns like it had from 2005 to 2012? I don't think so. Even if iPhone use picks up in India, I don't think so. They are going to be compensating for declining market share in some of their other largest markets. They never really got the performance out of the Chinese market like they expected. And I think that a lot of things are going to be happening in terms of how I think they're going to lose Russia almost completely as a market. They're going to lose a lot of other companies or countries almost completely as a market. So, and back to the Cybertruck here. Correct, Jason, will be last. We have the LDV EV U truck at this stage, but that was just a converted ICE vehicle. Interestingly, we have several companies converting Toyota U trucks for miners. So living right down here on the border like I do, I have the opportunity to see a lot of vehicles that aren't sold in the United States coming up from Mexico. And in my Patreon group, I do have a Patreon group. The link is in the description. If you guys haven't heard about that before, I posted a picture of a JAC truck that I saw. I've seen several more JAC vehicles since then, and at least two of them have been fully electric trucks, which are not directly sold in Mexico at this time because based on the plates, the trucks came up from Mexico, but somehow they got them there, and I think that's pretty pretty impressive. But the trucks look like copies of the Toyota Tacoma. There's nothing original about how the trucks look, but they are electric or hybrids. Those are the ones that I've seen. So, yeah, I know a lot of people who own an iPhone and can't afford it, but they're locked into the ecosystem, cloud storage, photos, iTunes, the calendar, etc. Yes, that is true. And the nice thing about Android system is that you don't have to be locked into doing that. You can use all of that through Google, through your iPhone, or whatever. So, yep. Nothing. Oh, did you watch the Starship launch? It was spectacular in many ways. Actually, I did, and I talked to a number of people beforehand. I'm like, yeah, it's going to blow up at launch, and that's kind of what they're expecting, and that is kind of what Elon tried to hint at, is that this is really about data. So I think there were 33 of those Raptor engines that were powering Starship. This is a 450 or 400-foot monstrous rocket. It's the largest one produced since the Saturn rocket days, and I think it was fairly impressive that it did anything. But this is actually SpaceX's process: is they quickly get something to launch, they launch it, it blows up, they gather the data they need, and they try again in a few months. In less than a year, the next Starship rocket is going to be launched. And this is their process. And it's always used as as something to beat Elon Musk over the head with. And I think that this is entirely unjustified. And I think this is just simply part of their development process. And that's what it's going to look like going forward over the years as well. Am I enormously encouraged by this? Yes, but not from an economic perspective. I just really like the idea of space travel. I really like the idea of possibly colonizing Mars one day, or even terraforming Mars one day, although I don't know how that would be done. Actually, I don't know if you guys checked out the news. I think it was 2 weeks ago, that had to do with the Japanese space probe that went out there and took samples from an asteroid, and they found basically what was they found uracil, essentially, which is one of the nucleotides used with RNA. And I think that this doesn't necessarily settle the idea that life on this planet actually originated from nucleotides formed extraterrestrially. But I think it goes a long way towards pointing to the fact that RNA world hypothesis is probably the correct way to look at abiogenesis, or abiogenesis being the creation of life from non-life. Is that at this point now, we have found all nucleotides that are needed for RNA or DNA synthesis on asteroids. We found all of them. So the building blocks for life are being created in space, without and not necessarily here on Earth. So that is something that I find very, very interesting. Our RNA world hypothesis for the longest time has always been this sort of unprovable idea that's very interesting and seems to be possible, but there's no way to actually test it. There's no way to actually you can't falsify it, so it's very hard to test it ever. And that window, or that era rather, is now closing, now that we found all 5 of the nucleotides we need to build both RNA and DNA in space. So I think that's very, very important. And these are the things that we're discovering with space travel. We're discovering new things about our universe and about the origins of life on Earth. What does this have to do with money? Nothing. But I'm endlessly fascinated by new discoveries like this. So the self-destruction started before Starship left the pad. So I haven't read that far into it right now, but I think the idea was to, as they said, have a rapid, unplanned disassembly of Starship. I don't know what was on it other than instruments on there. So Hal says, I'm an Android person, been super happy. Many must thank Apple as the two compete, and that would drive innovation. Sadly, rest in peace, a Windows Phone. Funny how that failed. Windows had a couple of other copycat ideas like Zune that failed, where they copied Apple. I'm an Android person too. But I would probably say that my dedication to Android is probably just to be in opposition of Apple. I've never gotten Apple as a brand, and I view most people that are loyal to Apple as like I said, they're trapped in the ecosystem. And yeah, and the other thing is, I never buy top of the line phones anyway. I always buy something one or two generations behind because I'm not into spending $1,300 on a brand new phone. Not going to do it. I'm going to spend less than $500. I'm going to keep it for like 4 years. So I want something that works. I want something, and Android it works. And the newest phones, of course, they compete in terms of price, though they're not that much less. Let me see here. You forgot BlackBerry. Yeah, long time ago when I worked in a sensitive position where the data that I worked with was constantly under siege by hackers and things like that. We were actually banned from using anything but the BlackBerry. We were not allowed to have iPhones. The iPhone was deemed to be not secure enough for the types of communications that we're doing. I know that's changed, and it changed sometime around the 2014 time period for the type of position that I was in. But for the longest time, also, that was the other reason that I didn't like the iPhone, is because I actually couldn't use it. I was banned from using it by the agencies that I worked for and the companies that I worked for because it had security issues. Those security issues, and they were very particular security issues, have been closed at this time, and they're no longer a concern. And you'll see iPhones being used across many different highly sensitive businesses and government agencies. Although, and as I said, BlackBerry, I haven't seen a BlackBerry in a long time. I assume that they're no longer being produced, but I could be wrong on that. But yeah, so I've always framed in the United States, at least, that the war between Android and Apple is essentially a religious war. It really doesn't matter who's right or who's wrong. You have picked a side, and you're going to die for that side. And that has been the case for the vast majority of people. And I would bet that the people that switch between Android and Apple, and I actually saw this with a number of people I know, that they switched from Android to Apple because their texts kept showing up as green on all of the group discussions they had with people that were on Apple, and they were embarrassed by it. And I would bet that the amount of people that convert from Apple to Android or from Android to Apple mirrors that of the amount of people that convert religions. And I would bet that it actually does that. And one of these days, there's going to be some academic research out there that compares switching between Apple and Android, but to the amount of people that switch between Christianity and Islam, or Islam and Christianity, or something like that. It will actually be compared. So, yeah, well, we're really getting off track today. Yes, we always get off track though. But have you thought about the Comac C919 passenger jet? Will they threaten Airbus and Boeing? I have not thought about that in the slightest. And I don't even know who's producing it at this point. Somebody else mentioned that to me in the comments of some discussion that I was in on battery powered passenger airlines. And I never bothered looking that up. I haven't gotten to it. So I can't answer that with any degree of intelligence here. So let me see here. Is our earnings out this week? It does not look like they are out this week. Oh yeah, Intel's also out this week. Let me see. Chevron is out this week. 3M. So no, Apple is definitely not out this week. I don't know when they're going to be out, but so it's a Chinese jet. Well, I don't know. It would probably be a long time before they're able to threaten, and just because it is a Chinese company. At some point, they may be able to. I remember when Airbus was not considered a threat to Boeing's business at all, and now it's definitely not just a viable alternative. It is a real threat to their business. So much so that Boeing, prior to 2019 or so, they really did not prioritize their government business. And in 2019, they started to, because I think in 2019, government business only made up about 8% of their business. And I don't know what it makes up today, but I know it's going to be a lot more than 8%. It's at least double that probably, because they really focused on fulfilling government contracts as a way to stabilize their earnings. And also because when it comes to government contracts, you can overcharge for everything. So I do expect something. I said I do expect that the Chinese jet might possibly become a viable alternative someday, but a competitor like Airbus, I don't know. Do you think it'll be a double whammy? The budget deficit drama will happen at the same time as the commercial real estate debt bomb is really set for like 2025. That's when we see a large amount of these shorter term 5 to 7 year loans come due, and they'll have to be renegotiated. So I actually expect that to come to start hitting the market and really be a concern right around the beginning of 2024 and into 2025. And that's really going to mostly affect regional banks that have a high degree of geographical concentration and won't be able to absorb losses in one geographic location with gains in another. And it's not going to be evenly spread across the economy. I think the real double whammy right now is going to be the budget deficit drama, which, remember, folks, is not real, right? This is not real. Both sides are going to play a game of brinksmanship to see who blinks, but they will sign an agreement at the 11th hour so the United States does not default on its debt. But both sides are going to make you think that the United States is about to default on its debt. Okay, that's probably going to happen. But the other double whammy here is going to be the less than stellar financial results that are coming out this week. And over the next 2 weeks, little by little. This week, I think, is going to be very, very important. And by the beginning of next week, we could be starting to see a little bit more movement in the market. And let's talk a little bit about what I mean by movement in the market. So right now, one of the big arguments that's being made is the calm in the market is not an artifact right now of anything general in the economy. It's more about individual news that's come out about companies, meaning that when individual news that's good comes about a company, it's up. Individual news about another company, it comes out, it's down. But it's very company specific, and it's not enough to drive the market in any direction. And the gains and losses between the companies have sort of been canceling them out. And look, there's this quote from the article says, instead, stocks are responding almost entirely to company specific news, causing some to jump and others to tumble, and their moves ultimately to cancel each other out. For every AT&T down 3.79% or Tesla down 1.53%, a lot more over the last couple of days, which tumbled 10 and 9.8% respectively this past Thursday following their releases, there was companies such as Snap-on and Abbott Laboratories, which popped 8% and 7.8% after reporting this week to offset it. Sometimes it's really a market of stocks rather than just a stock market. And the companies that they were comparing are not really comparable in terms of the type of business that they're in, but Snap-on and Abbott Laboratories are definitely staples in the economy. AT&T as well. Tesla is not. It's something that's quite different. But the calm has been reflected in the market swings as well. Realized volatility over the past 30 days has just been 9.4%, and investor expectations for future ones. For future ones, with the CBOE volatility index hitting 16.46 this week. It's the lowest reading since 2021. The lowest level of implied volatility suggests that investors don't see much need to buy protection against a stock market decline. That is something they could come to regret. And I agree. I think that if you are not planning on a stock market decline in the next month and a half or so, I think that is something that you might come to regret. Did you see the new pictures of the Polestar 4? It looks great. Yeah, and I've actually started to see a few Polestars in the wild here, out here in California. I just saw my first one like 2 weeks ago, and now I've seen a couple more that have far more deliveries than Rivian, more models, and in more countries. Guys, I think Rivian's in trouble. I think Rivian is in deep trouble, and I think what eventually might happen to them is they get acquired for pennies on the dollar. They've just got a needle to thread at this point in terms of the economy, in terms of raising money, in terms of their current cash burn, and in terms of ramping production. The truck is great. It looks great. There's one of them in my neighborhood, and at least two of them that I see on the drive when I drop off my kids to school. And I think it's a great vehicle, and it's going to be a shame if this company goes out of business and that model is lost. I am hoping that they get acquired by someone who'll take the assets of the company and actually produce the vehicle. I'm hoping they get acquired by a Ford or a GM. Ford is probably unlikely at this point. I'm also really disappointed that their delivery van, the delivery van business might not take off the way they thought it would. But I think that they are very much in danger over the next couple of years. They have a narrow like opening to thread here, just like a needle. It's not. I'm not saying it's impossible to do. I'm not recommending that you bail out of their stock. I'm recommending though that there's caution in terms of your exuberance. And if I were to buy this stock, it wouldn't be at current levels. Lucid and Fisker would be my two. Those are the other two that I see that will probably end up getting acquired. The brands might not survive, but the technology and the vehicle models will probably survive under someone. Well, not necessarily Fisker. I don't. It Fisker might go belly up entirely. Lucid, on the other hand, I think that the brand might not survive, but the vehicle itself probably would, and it would be produced by someone else. They have a factory. It is not a Tesla level factory. That is really obvious by the amount of actual manual labor they need to get things done. Although I could say my opinion is likely biased by the fact that I have not made a personal tour of their factory. I've only seen videos of it, so I could have a completely biased opinion on this. They are also running the risk of following the exact same plan for marketing that Tesla did, which is they're starting off with that necessarily very expensive high-end vehicle with a really high margin, hoping that the sales from that are going to allow them to raise money in the secondary market to fund that next march down the income scale into a much broader market. That's been done once before with Tesla. It's not necessarily a blueprint that can be followed. They did this in an era. They did this in a very different era of near zero interest rates, where it was very attractive for convertible, it was very attractive for the companies to issue zero coupon convertible bonds. The idea that you could issue a zero coupon convertible bond right now is laughable for a company like Lucid or Fisker, when you could go out and get 4% on government debt on a short-term basis or 5% on a CD today. Why would you do that? Okay. So they're going to have to offer some interest on the debt that they're acquiring, unlike what Tesla did. And this is a kind of a complex argument, or kind of a complex concept that basically I'm saying is they're not going to have the same ability to ride out bad times by suckering investors into buying more stock or into buying these convertible bonds that don't pay any interest. If they issue these convertible bonds, they're going to have to pay interest on it, which is going to increase their cash burn. And I think that I think it's going to be very tough for them. I think out of those three, Lucid, Fisker, and Rivian, I think Rivian probably has the best chance to succeed, and it's not a great chance. I think that Lucid and Fisker are in trouble. I think that Rivian is in trouble. I think that they have a narrow pathway to success, but it's absolutely possible that they could do that. All right, guys, let me know if you guys have any other questions. I'm about out of time today. I do have a few minutes more. Wanted to see if I missed anything here. Let me see here. Oh, talking about how Shoeless Joe. I almost called you Shameless Joe. Shoeless. It's because I'm watching the show Shameless right now, which the show Shameless reminds me of the town that I grew up in, except everyone's closer together because I grew up out in the country. The people there had these similar problems as Shameless. They were just more spread out and able to hide them. But I tell people all the time that the town that you're looking at now, where I grew up, is not the town where I grew up. It's completely changed. So, but anyway, yeah, Apple cannot simply take out all competing fintechs out of there. out of their marketplace. That's already been settled by case law, and they would be sued again by doing that. And based on current regulation, they couldn't just say, hey, SoFi's competing with us, we're taking them off the marketplace. They can't do that at this point. Tesla's impact report was released today. Very good read. And as usual, they tick the boxes. I haven't read that report yet. So I live in London, and I'm seeing an increasing amount of MG4 and Kia and hybrid. Teslas are by far the most common EVs. So one of the members of my Patreon group actually just got back from Hong Kong. And he was saying that you can't even explain how prevalent EVs are in Hong Kong at this point. He said that every taxi that he took was a Tesla. And Hong Kong is probably not where you're going to see the densest concentration of EVs anyway. It's going to be in the Pearl River Valley, where a lot of these companies are located and where a lot of the wealth is located. And that is going to be it's going to be in the Pearl River Valley, where some 60 million people live. And it's also going to be in Shanghai. And that's where I think that the highest concentration of EVs are. And the way he was describing it, basically, I think shows the future of what the United States is going to live in. These are the future of the United States is going to live in. This is an area that Hong Kong has incredible density. It used to be the densest place to live in the entire world. I don't think it is anymore. I think actually Belgium is, oddly enough. And this is a place where most people don't own homes. They live in apartments. And you still have a really high concentration of electric vehicles in Hong Kong. And I think that's kind of what the future looks like here in the United States. And I think there's a very bright future for the electrification of the economy. Pay very close attention to the development of sodium-ion batteries. So by third quarter, BYD will be releasing one of their, I think it was the Seagull, the BYD Seagull is going to be coming out with the first sodium-ion batteries that are in cars. If right now lithium is retailing about $90,000 per ton, and sodium is retailing about $3,000 per ton, even though sodium's heavier and your average car battery is going to be between 300 and 400 pounds heavier, you're likely going to see more and more car batteries that are being made that are sodium-ion batteries. Because of the way chemistry works, the chemistry for a sodium-ion battery is relatively, not necessarily the anode chemistry, but the cathode chemistry is going to be relatively similar to what you have in lithium-ion batteries. And do you think that Apple would have any? I think it's absolutely going to have an unfair advantage in the fintech field just because it's in the same ecosystem as everything else that their Apple customers have. I think that they pretty much they don't necessarily have a lock on all Apple customers, but they've got a massive advantage. And is it unfair? I don't know that you can call it unfair. It's just a simple fact. If Trump gets back in, EV rebates would free the first to go. He is not a fan. So I don't generally debate politics on here, but I'm going to say that you're probably wrong about that because the EV rebates are actually tied to those vehicles being made in the United States, and particularly the batteries being made in the United States, which we want to do to encourage manufacturing jobs coming back to the U.S. And I think a lot of what was in the Inflation Reduction Act was a load of crap. I think that is the best thing that came out of it. A couple of things, and with the CHIPS Act too. Those are the two most important pieces of economic legislation passed in the last decade or so, with the Inflation Reduction Act, but only a portion of it, and the CHIPS Act, which basically are encouraging high-end chip manufacturing to move back to the United States, as well as making those EV rebates tied to how much of that vehicle is manufactured in the United States. I think that he's not likely to get rid of that or the CHIPS Act for two reasons. The big one is China. In both cases, it makes us less vulnerable to supply chain disruptions in the case of any conflict with China. It doesn't have to be a military conflict. It could be a trade conflict. And also it brings manufacturing jobs back to the United States. I think and I don't think he really has an opinion on EVs, one or the other. He basically was doing that in order to cater to his base, which for one reason or another has decided that EVs are a terrible thing. It is the wave of the future. If you are against EVs, then you look a lot like buggy whip makers in the 1910s that were arguing against cars, saying that every time you got in an accident, they were going to explode because of the gasoline inside of them. Or they even put out an ad somewhere saying that women would be infertile if they moved at greater than 30 miles an hour. That was an actual campaign against cars back in the 1910s. You people that hate EVs, you look just like them. That's all I'm saying. Any thoughts on South Korea pushing to be the first to scale production of solid state batteries? No thoughts on it yet because it hasn't happened. And especially when it comes to NEO, I've been really, really disappointed with the supposed progress on solid state batteries. And look, I'm perusing through the scientific literature all the time on batteries. I'm perusing white papers, all this stuff. There's a real issue solved, or that hasn't been solved, with cycle life when it comes to solid state batteries. They're really freaking cool, but the whole issue with cycle life and dendrite growth has not been solved. And until that does, you're probably not going to see solid state batteries enter the realm of large scale energy storage that's needed for something like a plane or a car. We may be a couple of years away from that. I hope we're not. And I hope that I missed something that's out there, but I hope but I think it's minimum a couple of years away from there. All of the solid, I just can't remember the name, or quantum, whatever the battery company is that I've talked crap on for the last year or so. I said they're 7 or 8 years away from production, 7 or 8 years away from revenues. They're further away than that from actual real revenues. So, another reason I may open a position of Polestar, they're due to open a U.S. factory in 2024. Presumably they'll get, that's the reason that they're opening that factory in the U.S. I think they're opening an assembly factory in South Carolina and a battery factory in Georgia. So that is actually, the weird thing is that is not even the largest settlement that Rupert Murdoch has ever paid. And let's remember, Smartmatic is next to sue Fox, and they're going after an even larger bite than that 1.6 billion. And that, so I've been through arbitration of disputes and lawsuits a lot. When you settle, you generally don't get more than half of what you were asking for. You generally get a lot less than that. The fact that they settled after they made an admission of many of the claims. I think that's absolutely astounding. But is it going, and with the departure of Tucker Carlson from Fox News today, is that going to affect Fox as a investment? I don't think it's going to affect them that greatly, despite the fact that, because Tucker Carlson, as popular as he was, he only had about 3 million viewers per night. They find somebody else to replace him who's equally willing to throw bombs, but maybe a little bit more conscious about telling the truth or not telling the truth. But the fact of the matter is that Fox News did this to themselves, but they can also afford it. I think that any disruption to their operations is actually rather short term. Even if they settle for a similar amount with Smartmatic, another 7.87 million, it's really just a bump in the road for them, and they're going to continue on trucking, and they're probably not likely to greatly change their strategy at all. And I think that's really kind of disappointing. But we'll have to see. I think Don Lemon from CNN was let go today for, I don't really know the reason, but there were some allegations of misogyny, and he made a couple stupid comments. But he's also been in the air since 2006. Sometimes it's just time for fresh blood. Tucker Carlson, on the other hand, you just got to read through the texts that were made public by him. You got to look through the past cases where, his lawyers actually made the argument in court that nothing he says is true, and no reasonable person should accept what he is saying is truth or fact or should believe him. He made that argument in court. His lawyers made that argument in court for him, rather, I think it was for a defamation suit of some sort. The fact that he's going does not surprise me. He is, and Laura Ingraham are largely responsible for that $787 million settlement. And they're not going to make that back. They're not going to make $787 million back with a Tucker Carlson. That's why it's being done. But will this affect Fox as an investment long-term? No. They have a hugely diversified income stream. Lots of different ways to make money, including lots of different things you don't even think about. Fox News is probably not even close to their biggest moneymaker, so I don't actually think that it's going to affect them greatly in the long term. All right, folks, I am going to call it a day today. It has been 54 minutes that I was on. Thank you very much for attending today. I'll be back on Thursday. I did miss Thursday because I basically just got busy, and looking to put out some more videos later on in the week. And if you haven't subscribed, please subscribe. And one of my favorite programs is our cartoon president. So if Trump gets back in office, more episodes to watch. Yeah. And I'll really look forward to seeing Mr. Garrison on South Park return as a proxy for Trump too. Oh, any thoughts on the money line 30-1 reverse split? They just don't have a choice. It's a matter of regulation. Not splitting means they'd be kicked off the exchange. A 30-1 split probably puts them into safe territory for a while. I like Moneyline a lot, but Moneyline has some challenges ahead of it, and they are unlike Tesla, where Tesla is racing towards growth. Moneyline is going to be racing towards profitability. They need to prove profitability before they can raise money. The value of their outstanding debt is larger than their entire market cap at this point. So they have to race towards profitability. The bet here is that they're going to race towards profitability before they burn through all of their cash, which I think they're going to make it. There's a distinct possibility that they don't, but at this point, it looks like they're going to make it. And a lot of that has to do with the fact that they are not totally dependent on loan originations for their revenue stream. They have a diversified revenue stream, and they're small enough that they can switch gears relatively quickly, kind of like what SoFi did when the student loan business collapsed. All right, guys, really got to go this time. Thank you very much for attending, and I will be back on Thursday.